Hello, I'm Richard Murphy. I've been making a series of videos about what I think the tax justice movement should be looking at in 2021. The reason why is that the tax justice movement has been going for 18 years. It's been extraordinarily successful. It's won campaigns against large companies. It's created country-by-country reporting. It's forced automatic information exchange from tax havens onto the international organisation's tax agenda. It has increased the amount of information flowing to domestic governments about tax abuse in those places. It's improved beneficial ownership registration in some countries, and so on. But there are very many issues still to address. And I've explained overall what I think tax justice is about. I have, in the introductory video to this series, explained that tax justice is about creating tax systems that tackle the problem of inequality in our world. And that problem is massive. And one of the reasons why we end up with unfair tax systems, and we have got unfair tax systems, let's be honest about that, is because those systems are not well enough designed to achieve this goal of tackling inequality. And that failure in design is something that I believe can be identified through a mechanism that I have in the work that I've done with Professor Andrew Baker of Sheffield University called tax spillover analysis. Now, what a tax spillover is in this context is a feature of a tax system that undermines another part of either the same tax system or undermines a part of the tax system of another country. Now, that can be by accident, and it can be by design. So, for example, tax havens deliberately undermine the corporation tax systems and sometimes the income tax systems of other countries by deliberate design. But within a country, it can simply be because, well, tax systems are pretty darn big and people think what might be a good idea at one moment eventually turns out to be a bad idea overall because, for example, what seems like a sensible incentive today turns out to be an opportunity to undermine the integrity of the system as a whole tomorrow. Let me give you an example. Some of these examples come from the UK because many of the people watching this video will be in the UK, but you will recognise them in many other places. Simple, straightforward fact. The basic corporation tax rate payable by companies in the UK on their profits is lower than the basic rate of income tax payable by a person on an identical source of income if it was recorded in their own name. What is the obvious consequence? Well, it pays somebody in many circumstances to incorporate a business to record their income and pay less tax as a result. That is a particularly perverse outcome. It makes no sense at all. It also makes no sense that in the UK, somebody who earns a capital gain, generates a capital gain on the sale of an asset that they have owned, pays probably half the rate of tax, maybe less than half the rate of tax in some cases, than they would do if an identical sum of money was to be received by them as a result of work that they had done. First of all, why do we want to penalise work and encourage asset speculation, which appears to be of little added value to society? But second, why do we want to forego that income? Because foregoing the income on the capital gain earned by the person who, by definition, has wealth. After all, you have to own an asset to make a gain. If you own an asset, you are by definition wealthy. Then why would we want to do that? What is the benefit of actually subsidising, in effect, the wealthy by offering them a lower tax rate than we are providing to those who have to work for a living? Now, these are examples of tax spillovers. There are other tax spillovers. For example, the inability of a tax authority to collect tax because it doesn't have the resources required to collect information to do so. The inability of a political system to actually persuade itself that a change in the tax system is necessary to create social justice. I would use here the example of Ireland, where the dedication of all political parties to the 12.5% corporation tax rate clearly leaves Ireland as an isolated country within the international community and outside the acceptable boundaries of behaviour that are indicated to be appropriate, whilst undermining now Ireland's capacity to move forward as a modern state whatever reason it had for introducing that tax rate has gone, it can survive without it. So these spillovers undermine the overall goal of creating an efficient tax system that delivers a progressive consequence in a consistent fashion with the overall taxation goals of a country, which must be to run its economy in a way that is fair and just to generate wealth for the benefit of all who live within it. That's not really difficult to work out, but they exist. They're commonplace. But the tax justice movement is not spending the time and effort to identify what they are, either generically, because many of these are commonplace, or within particular countries to run campaigns locally to seek reform. But if it did, I believe its relevance to campaigning, both internationally and nationally, and the latter is very important now, because justice is local as well as international. If it did this, then I believe its relevance in 2021 would grow enormously, because it would have a tool. We've developed it. It's available. I'll put the links in. It's below this video, and they will be in the associated blog. Those tools are available. They could be used. They can be used by civil society. They don't require considerable skill. They do require some judgment. And they are available as a campaigning tool. Tax justice needs to look at this, because it needs to break out of its silo of thinking that the only issues of concern to it are tax havens and corporate tax abuse, and consider the wider issues that undermine fairness in the society in which we live and address those as well. That's what I think it should be doing in 2021, and that's why I think tax spillovers should be part of its agenda. Thanks for watching. If you're interested in what I've been saying in this video, please subscribe. There is a button below the viewing screen. If you're interested in what I have to say on Twitter, I'm at Richard J. Murphy on that medium. If you want to look at my blog, that's taxresearch.org.uk. And we have a Facebook page as well, Richard J. Murphy. So one of those things will get you more information on what this video series is about, and I hope I'll see you again soon.